Hello Dairy Today viewers. On behalf of the Market 360 advisors here at Stuart Peterson, I'm Bob Davenport, and this is your Dairy Week in Review for May 30th, 2014. So starting out here, let's begin by taking a look at where our CME dairy components settled at the conclusion of Friday's trade. Blocks finished up the week at 196 even, that's down 6 cents. Barrels finished the week at 193 1/4, that's down 8 3/4 cents. Cash butter rallied significantly again this week, all the way to $2.30 a pound, up 12 cents on the week. June whey settled at 67 1/4, up 3/4 cent. And June non-fat dry milk finished the week at 179 1/2, that's down 3/4 cent. Shifting over to Class 3 futures, things were a little bit mixed here this week, with the June contract settling at 20.83, that's down 23 cents on the week. July settled at 20.62, up 4 cents. And the 2014 average was unchanged on the week at 21.28, that's down from the week's high though. The 2014 average got all the way up to 21.52 and then dropped back down to finish up the week. So let's shift over now to what we saw in cash cheese this week. There was a lot of offering that took place, as well as a lot of bidding that took place, and that really led to a lot of volatility within the dairy markets here this week. Now, as you can see here, we did get a little bit higher earlier in the week, but to finish things off, we did finish below last week's low to really continue this downward trending pattern here. Now, the black barrel average was down 7 3/8 cents here this week, and it's been really a pretty ugly sell-off going all the way back to the end of March here, off of our high at around $2.40 a pound. So the black barrel average is now at 194 5/8 at this week's settlement. So again here, things are not looking overly strong in cash, but again, the buyers are willing to step back in. There's been a lot of buying interest, so that should help to support hopefully cash prices going forward here. Now, just given the volatility here that we saw in cash this week, with a lot of offering, a lot of bidding interest, it led to some pretty big moves in Class 3 prices this week. So here we have a daily chart of our second month contract, which is still that June contract. Next week, July, will be rolling into that driver's seat in that second month spot. But so the June contract saw some really big swings here this week, trading within a range of 133 cents from this week's high to this week's low. Now, over the course of the week, again, we did settle up with a 23-cent loss on the week, but we did see some really big swings, seeing 2 limit moves this week alone, and over the past 6 trading days, we've seen 3 75-cent limit moves. That's the first time in quite a while now that we've seen that type of volatility within the Class 3 market. So going back to Tuesday, we did see a limit up day after we did run into some good buying interest in cash. But following that, on Wednesday, we actually went limit down and gave back all of those gains after the sellers came back into cash and began offering carloads of cheese lower again. Following that, we did see some follow-through selling here on Thursday, where we gapped lower a little bit, and we were down about 30 to 50 cents, depending on which month you were looking at on the Class 3 futures. Now, we did rebound a little bit on Friday's session, but we did finish quite a bit off the highs. We were up about 50 cents just following cash after some initial support there, but we did give back the majority of those gains, and we finished about 25 cents higher here just on the day on Friday. So again, over the course of the week, saw some pretty big price swings. We went limit up, limit down, and then we did see some follow-through weakness, and we did finish the week down 23 cents overall. But the good thing is we did continue to really hold above these prior lows here, which is pretty significant as far as maybe finding some additional support going forward. Now, taking a look at some different fundamental factors here. This chart represents our monthly cheese inventories, and this goes back to really about 2010. And you can see on this chart, over the course of the past several years, there's a definite cyclical pattern in cheese inventories, where you can see after we peak out here, we definitely tend to follow the same pattern over the past few years, at least on an annual basis. So you can see We did put in our last peak all the way back in May of 2013, and then we saw just that huge significant drawdown in cheese inventories, which really helped to support prices here. But it seems like we may have finally found that bottom point here as far as inventory drawdowns go. And you can see that we've just slowly been starting to increase those inventories here. And for the month of March, we were up 1.8% from March, I should say, in the month of April, rather, we were up 1.8% from March. And on a year-over-year basis, though, things are still quite a bit lower than where we were at in April of last year. We're down 8% year-over-year, but that contraction is beginning to slow. We were down 9% year-over-year, and the several months before that, we were increasing those year-over-year drawdowns. So this could be a sign that stocks are finally beginning to rebuild, and if we are going to see a significant rebuild of cheese inventories, that could possibly help to put a little bit of pressure on prices going forward here. So definitely something to keep an eye on. If we really start to see cheese inventories rebounding, that could be a sign that maybe we're in for some softer prices. Let's take a look at how weekly slaughter numbers have been coming in here. Now, after stabilizing for about 3 weeks in a row here, we did drop down just a little bit for the latest week ending May 17th. And weekly dairy cow slaughter came in at 47,900 head. That's down just slightly from the week prior, where we were holding at about 48,500 head over the course of those prior 3 weeks there. Now, as you can see, we are down significantly from where we were that same week last year. You can see just that big spread there between the two lines, the red and the blue line representing 2012 and 2013 numbers, which came in right about in line with each other last year. Now, from a seasonal pattern, we could expect to really see a drop over the next week, which would put us at significantly lower slaughter numbers, and we could expect to see things maybe trend lower until about the mid-July time frame, where we tend to bottom out from a seasonal standpoint, and then slaughter starts to really rebuild into the end of the year. Looking at the week ahead, again, May milk will expire on Tuesday. That will make July now that second month contract. Other than that, not a ton going on as far as fundamental reports go. So tune into next week, though, for a recap of what we saw in the markets taking place next week. That'll do it for us here today. On behalf of the Market 360 advisors here at Stewart Peterson, thanks for watching and have a great weekend.